welcome to all the students who are watching this across the country. This is the second contact class in the postgraduate diploma in LPO. And in today's session, we're going to be looking at the subject speed. This expands to skills, personal effectiveness, and enterprise development. I am the subject head for speed. My name is Ritwik Lukos. A little bit about me a little later. But let's start by looking at the PGD-LPO program itself. One of the goals of this program is to educate students, lawyers, and entrepreneurs about the LPO space, about the LPO industry. And the speed subject itself is particularly focused on the business of LPO and the practice of LPO. In the first semester of the program, we aim to understand legal process outsourcing, both from the inside and from the outside. We go into the LPO to understand the organizational structure. We look at the entity that is the LPO itself and the work that an LPO undertakes. In the second semester of the program, we focus on you. We focus on you as a legal professional and what is required from your side to become a quality LPO professional. We're still in semester 1 of the program. Therefore, in today's contact class, we will focus on what I feel is a very, very interesting topic, the LPO setup. Before I begin on the topic itself, a brief introduction to me and why am I taking this topic. I am a lawyer by training. I am an entrepreneur by choice. I'm a vice president at Rainmaker, and I've dealt with the LPO industry from a number of different perspectives. I have advised LPOs as a lawyer. I have worked with LPOs as a recruiter, as a trainer, worked with LPOs as a business consultant, and at times have also advise people who are looking to invest in an LPO. At Rainmaker, we work with the LPO industry in all these capacities. And this is really an opportunity to share some of that understanding on the LPO setup. Before we begin, it's very important that all of us are on the same page. And it's important that all of us understand the same aspects of an LPO. So there are 3 things that you should know before we proceed any further in this discussion. Number 1, you should be familiar with Unit 1 of your PGD-LPO material. Unit 1, which is Introduction to LPO. You should have read all the materials, the supplementary materials on eMentor, and have undertaken the quizzes that are there. If you've done both of these, then the least that you understand is you understand the business case for legal process outsourcing. You understand what legal process outsourcing is. You understand what shared services is. You understand what is meant by onshoring and offshoring. And most importantly, you understand the business case for LPO. The corporate setup. We will look at 3 distinct aspects. One is the multinational structure, that is the LPO. Second is we look at the India piece, which is the India corporate structuring. And thirdly, we look at the overseas corporate structuring. But before we go on to part 1 itself, it's important for us to understand 2 things when it comes to a corporate structure. A corporate structure really comes out of 2 main considerations. The first consideration is one of strategy, meaning if I choose a particular entity to house my business in, what can I do with this entity down the line? How do I raise funds? How do I tie up with other people? How do I grow this entity for the requirements of the business? The second consideration is that of liability. I know that I'm talking to a number of lawyers across the country. Most of the people who've taken this program are lawyers. For us as lawyers in India, liability seems to be a question that's very, very far away. In India, very seldom are lawyers sued by their clients. But overseas, in the US and in the UK, professional liability is a big issue. That means if you are a lawyer and you fail to undertake your case professionally, or if you mishandle the case, your client can sue you. So therefore, professional liability is a big risk for anyone practicing law in the US and the UK and other overseas jurisdictions. Therefore, the strategy and liability are two issues that we will talk about in the course of part 1, which are two issues that influence and have a factor on the type of structuring involved in an LPO. One disclaimer before we move any further, which is a lot of the items that we're going to discuss today are items that you should get specific legal advice on, or get specific management or finance advice on. What we're going to do today is to give you a 20,000 feet view of these issues. We will go into each one of them as well. So let's dive into part 1, the LPO corporate setup. In unit 1, we should be familiar with 3 terms that you see on your screen right now: offshore, onshore, and right shore. These are also terms that are covered in your reading material, in your speed reading material. It's very important for us to understand these terms and to be very, very clear about each of these terms before we can talk about structuring at all. What is shore in this context? What are we talking about when we say onshore, offshore, right shore? The dictionary meaning of shore is a body of land, a piece of land that surrounds any body of water. It could be a coastline, a beach, etc. But when we look at offshore, onshore, and right shore, there's a particular perspective from which we need to understand shore. And that perspective, very simply, is your client. So in the LPO context, you're onshore depending on where your client is, or you're offshore depending on where your client is. Let's take a live example. In the diagram on the screen, we've divided the page into 2. On the top right hand corner is the territory of the United States of America, and the bottom left we have the territory of India. Now there are 3 things that you should try and identify in this screen, one of which I've already mentioned, which is that we're dealing with 2 separate territories, United States and India. The other aspect that you'll notice is that there's an entity in 2 territories. So you have Global LPO Private Limited situated in India, and you have Global LPO LLC, which is situated in the USA. You also have an oval diagram that identifies the client, so you know where the client is situated. The client is based in USA. The 4th item that's on the screen is, next to the Indian entity you see the word delivery, and next to the global next to the American entity you have the word sales. Now this is a very, very simple representation of the multinational structure that most LPOs have. And this diagram also helps you understand the concept of offshore, onshore, and near shore. So let's try and work this out. Let's try and break this down. The client is situated in the US. Therefore, onshore is Global LPO LLC. And Global LPO LLC's main function is sales. They're near the client, therefore their main function is sales. In India, we have Global LPO Private Limited. Therefore, we're in a territory other than where the client is. Therefore, the Indian entity is offshore. If the entity is in the same territorial space as the client is, you're onshore. If you're in another territory, jurisdiction, or country, you are offshore. So what is right shore? What does the term right shore mean? We understand offshore, we understand onshore. What is right shore? Right shore is really a more complex version of this same diagram. Let's for a moment imagine that we have multiple clients. So we have one client in the USA, we have one client based in London, we have one client based in Tokyo, and let's say that we have another client based in Paris, France. So we have multiple clients. So we're dealing with multiple clients, we're dealing with multiple territories and multiple jurisdictions. Now the question is, if we have sales offices, if the LPO has sales offices in each of these locations, in each of these countries, they are very clearly onshore. But you may have a situation where, let's take an example of a client in Japan, and you have a delivery center or an execution center in Dalian, which is in China. And this is a business fact. A lot of Dalian in China is the number one IT outsourcing area for the Japanese market. Now, having an execution center in Dalian is really a right shore approach, meaning you have multiple locations, you have offices in multiple territories, and they work together to provide the maximum utilization for the client. In a similar example, I could have an execution center in Pondicherry for a French client, and I could have my sales center in London. Therefore, that is a right shore approach. I may not have an onshore presence, but I have a right shore presence. Let's move on to the actual entity in which the LPO is housed. As lawyers, some of these terms should be familiar to us, but let's run through them. The question we're trying to address in this slide, in this part of the class, is what type of entity do I use to house my LPO? Do I set up a company? Can I form a partnership? Can I form a sole proprietorship? How do I start this? How do I start this business? Let's start backwards. Let's start with a partnership. What is a partnership? A partnership is essentially, a number of people coming together and forming a partnership. This can either be a registered partnership or an unregistered partnership. And the partnership itself, has a legal recognition of its own, but there are certain limitations that a partnership has as well. Some of the key limitations of a partnership are, one, that you have unlimited liability, meaning if you have three partners and each of you put in money to start a partnership, and God forbid something goes wrong, it means that your creditor, the person you owe money to, can not only take the money that you've invested into the partnership, but also reach out to your personal property, meaning he can, if the liability is big enough, he can actually sell your house, sell your car to recover that money. So the first problem of partnership is unlimited liability. The second problem with partnership is that the liability is joint and several. What that means is, I have three partners, let's say Ritwik, Bhavin and Kunal are partners, and let's say that the loss is caused because of Bhavin's actions. Because we're all partners, Ritwik, Bhavan and Kunal are all jointly liable, that means liable together, and severally liable, which meaning I'm liable by myself as a partner as well. So if I'm the richest of the three, then naturally the person that we owe money to will come after me. At that point, I can't say, hold on, this is not my fault, he caused this. That's not something that's available to me. Therefore, there's a problem with liability. And if you go back to what we discussed earlier, in the international legal services space, liability is a big issue. Therefore, forming a partnership, forming an LPO in a partnership actually exposes you to more liability than you want. The second problem with a partnership is there's a constraint on the number of partners that you can have. The constraint is really you can have in a non-banking partnership, which is what an LPO will be set up as, not more than 20 members. So that limits a number of things on the strategy side. The number of people you can bring in, people you can raise money from, etc. The other term that's on your screen is LLP. What does LLP stand for? LLP is Limited Liability Partnership. And recently in India, we had the Limited Liability Partnership Act that was passed. And this gives business people a new option in which to house a business. The LLP really is it has all the features of a partnership, but it has the one advantage of limiting your liability. Hence the word limited liability partnership. What does that mean? Let's take the same example. Let's say that Ritvik, Bhavan and Kunal set up a partnership. Let's say that each of us put 100 rupees to form that partnership. If something goes wrong, my liability is limited to the 100 rupees that I've invested to form the LLP. Therefore, my liability is limited in that sense. The LLP bill has some other benefits as well, some other benefits of the Companies Act that an LLP can get the benefit of. So I won't go into that right now. That's a complete topic in itself. The most common form of entities that are used are companies limited by shares, and it's also a form that's most widely understood both by business people and by investors. You can have companies limited by shares. You can either have a private limited company, which is a closely held company, or you can have a public limited company. Don't confuse public limited with a listed company. Not necessarily the same thing. But yes, you can have a company limited by shares, either privately held or publicly held. If we go back to the slide, you'll see two other options on that slide. You have a branch and you have a representative office. And if you look very closely, both these options have been struck out. The reason that I've put this on the slide nonetheless is this is an option that may come to you, especially if you have an overseas entity looking to set up a company in India. For example, you could have, say, if you had an American or a UK company looking to set up a captive in India, one question that may come up is, can we do this as a branch office or a representative office? As you see on the slide as well, there's a caution there saying consult your lawyer, but there is some doubt on whether a branch office can undertake operational activities such as what an LPO does without setting up a company or a partnership or an LLP. Therefore, there's some doubt about that. Please consult a lawyer at the time of planning to set up your entity. A representative office is a more clear-cut answer. That's clearly out of the way. A representative office or a liaison office is merely meant to be an office where you don't undertake business activities. It's really meant for you to liaison with your clients. So just to meet your clients, but no work is to be undertaken through that entity. Therefore, if you go back to the previous slide where the Indian entity is really, the function of the Indian entity is delivery. And delivery means the doing of work, the operations, the actual undertaking of legal support services. None of these functions can be undertaken through a branch or a representative office. So your best option today is really a company limited by shares. Again, either a private company or a public company. So you've settled on the nature of the entity, which is a company limited by shares. Now the question is, what is the nature of this concern? The reason we ask this question is a number of the approvals and licenses that you require from the government will depend on the answer to this question, the answer to the nature of the concern. There are three options on your screen. The first is IT-enabled services. The second is legal services. And the third is export-oriented unit. Let's take each of them one by one. What does an LPO do? An LPO has, you have a number of lawyers sitting there doing legal support work or legal work, drafting contracts, reviewing documents, doing legal research, probably even negotiating with clients. How can we say it's an IT-enabled service? Is it an IT-enabled service or is it a legal service? And this is where, if we can go to the screen now, is if you go visit the website of any LPO, you will find a disclaimer on their website. And the disclaimer that I've put up here is the disclaimer that's on the website of Pangea 3. Pangea 3 are one of the leading LPOs in the country. been consistently ranked as one of the top LPOs in the world. Let me read out this entire disclaimer for you. Neither Pangea 3 LLC, Pangea 3 Legal Database Systems Private Limited, Pangea 3 Global Services Private Limited, nor any other subsidiary of Pangea 3 LLC, together Pangea 3, nor any of their respective directors, officers, employees, agents or representatives, together personnel, provides legal services or legal advice in any of the United States, United Kingdom or India. Pangea 3 is not a law firm, does not and cannot render legal services or legal advice to the general public, and is not engaged in the practice of law, notwithstanding any performance or delivery of services by lawyers who are or may be authorized to practice law in the United States, United Kingdom and or India. The services and related work product provided by Pangea 3 and its personnel are performed and provided solely at the request of lawyers and are being provided directly to those lawyers or their designees in support of the legal services that those lawyers are performing for their clients. Wow, that's a mouthful. And like any good lawyer, drafted with a lot of legal language there, a lot of legal verbiage. If you read, you can visit the website of Pangea 3, which is pangea3.com, and read this disclaimer at your leisure. But you can immediately take a few things from this. Number one, very, very clearly, this disclaimer states that Pangea 3 is not a law firm and does not undertake legal services, does not provide legal advice. Therefore, we come back to the slide. It's clear that an LPO does not provide legal services. Therefore, the rules and regulations that apply to a law firm in India or anyone who is undertaking legal services does not apply to an LPO. So an LPO is not a legal services organization from an Indian law standpoint. That brings us to IT-enabled services. LPO is an extension of KPO, which is knowledge process outsourcing, which is an extension of the entire IT-enabled services space. Therefore, if we were to categorize an LPO as per its business activities, we would categorize an LPO along with a KPO, which is in the information technology enabled services or ITES domain space. The third item on that slide is EOU or export oriented unit. An EOU really is any unit where a majority of their activities is, whether services or products, is for export, meaning that those services are provided to clients or customers outside of India. Is an LPO or EOU? Let's go back to our previous slide. Very, very clearly, the client is in the US. The delivery center is in India. The services are being provided from India to the US. Therefore, it is an export of services, an export of legal support services from India to the US, and therefore Global LPO Private Limited is an export-oriented unit. So we're clear that an LPO is an IT-enabled services unit, and also that it is an export-oriented unit. What does this mean for an entity in terms of licenses and approvals? Let's run through the licenses and approvals required to set up an LPO. The first item is very simply company incorporation. If you set up as a limited liability company, there are certain documents that you need to file with the registrar of companies, right from applying for a name, filing your memorandum and articles of association, subscribing to your first capital, and any approvals required from the registrar of companies. Once your company is set up, you have your bank account set up, there are certain other approvals that you need before you can start business. The first set of these are approvals that you'll have to get from the tax authorities. And this is something that each of us are familiar with. The first approval is really your PAN, which is your permanent account number. You can file that with the income tax authorities and they will give you a PAN number for the company. The second item is your TAN, TAN, which is your tax deduction account number. As a company, you will be withholding tax. Tax will be deducted at source, and which will be withheld with the company, and those amounts will be paid to the tax authorities at designated times in the year. Therefore, the TAN number is the second item. Some of the other approvals and licenses required are your service tax number. Recent changes on service tax itself. Till very recently, an entity that was in a SEZ location did not require service tax. This item is undergoing some change, but so most entities should get a service tax number. The other item is your IEC number, which is your importer exporter code. We just shortly discussed that an LPO is an export oriented unit, or an EOU. Therefore, to export services to another country, you require to be registered with the Department of Foreign Trade. An application can be made to the Joint Director of Foreign Trade and apply for a import exporter code. Also, another approval that flows from being an export oriented unit is authority from the customs. And what's typically done is that the premises where the actual services are undertaken, that premises is bonded by the custom authorities. Customs bonding really means that premises, for the purposes of Indian law, are custom bonded premises, which means that you can import equipment from outside without paying customs duty. And also you can use that customs free equipment to provide export oriented services. And for that, a manufacturing license has also to be sought for from the customs authorities. We also noticed that an LPO is an IT enabled services company. And as an IT enabled services company, one of the approvals required is that of an OSP, or other service provider. An application can be made to the Department of Telecom for an OSP, and this is especially required if the LPO wants something called an international private leased circuit, or basically a international private lease line for your data and for your voice transfer between countries. As an LPO, there'll be a lot of data transfer happening between you and your client, between your entity in India and your overseas entity. Therefore, many LPOs opt for an IPLC and also opt for an OSP license. The other item on your screen is SEZ. I'm sure that's a term that's familiar to most of you. Special Economic Zone. The SEZ really replaces the erstwhile STPI regime, your Software Technology Parks of India regime, to broaden the same benefits to business. So therefore, as an LPO, if you work out of an SEZ premises, or a premises demarcated as an SEZ, there are a number of benefits that flow to you as a business. Some of these benefits are income tax exemption. So as a company, you don't have to pay income tax for a set number of years. There are also benefits in terms of other taxes. For example, service tax, your customs, excise, other local taxes as well. Also, as any company, there are a number of local licenses and approvals that you will need to get to start your business. Right from your Shops and Establishments Act to other labor law licenses and approvals. And this is so if you're someone who's looking to start an LPO, or looking to understand how an LPO is to start in a particular location, please consult a local lawyer for an exhaustive list on local licenses and approvals as well. As we saw in the beginning of part 1, LPO is a multinational business. You have clients in one territory, you have your delivery center in another. It's also a multinational business in terms of the flow of funds. Therefore, you have LPOs in India that are funded by companies in another country. You have LPOs in India who have set up companies overseas as well. So this entire regime of cross-border investment is governed by your Foreign Exchange Management Act, or FEMA. So you have the FEMA Act and the regulations under FEMA that really give you clear parameters on how you can invest, how much you can invest, etc. If the money is coming in from overseas, or if the money is going overseas as well. If the investment into India is coming from outside, then under the foreign direct investment regulations, the entire amount, the entire funding, or 100% of the funding can come from outside. Therefore, if I set up a company and I need 1 crore of investment to start my operations, I can get the entire 1 crore from outside India. Which means that individuals or companies from outside India can contribute to their entire 1 crore for me to set up my LPO. However, if I'm an LPO or if I'm a company that's based in India and I want to set up my entity in the US or in the UK or in Australia, then there's a limit on how much money I can spend. Those limits also come from the FEMA regulations. And one point of note, and please check with your lawyer again before making any decision, is you can invest up to 400% of your net worth overseas. So the key word, 2 items here that you have to pay careful attention to. One is 400% and the other is net worth. The items that are also on your slide. What is net worth for this purposes? Net worth really is the sum of equity, which is your the capital investment made into the company, and something called free reserves. These are technical terms. You can check this up later. But essentially, we can take an example, take a live example. If I was a company where I have issued equity shares in my company for 50 lakhs, and in the course of my business, I've taken certain profits and I've kept it as reserves worth another 50 lakhs. My net worth of my company is the 50 lakhs of equity and the 50 lakhs of free reserves. Therefore, my net worth is 1 crore. If I want to make an investment overseas and I want to invest in a company that's in America, I can invest up to 400% of 1 crore, which is 4 crores. I can invest up to 4 crores in an entity that's outside India. So going back to the previous slide, if Global LPO LLC was investing into Global LPO Private Limited, Global LPO LLC could invest 100% into the Indian entity. However, if Global LPO Private Limited has a net worth of 1 crore, it can only invest up to 4 crores in Global LPO LLC. That's a summary of just the foreign investment regulations. Now, the 400% applies if you're a company. However, if you're an individual, let's say you're an individual and you want to set up a company in India and you want to set up a company in the United States. As an individual, you can only invest currently up to 200,000 American dollars. That's the limit to which you can invest in overseas. Therefore, there are limitations from a foreign investment regulation point of view in terms of how much money you can spend to invest from India outside to set up an entity outside. But it is easier for investment to flow in from outside into your Indian entity. This brings us to the overseas corporate structuring, and similar considerations come into play. What is the entity that you'd use to house your business in? And this is really a function of where you want to set up. So there's no real clear answer to this. Your answer may differ if you're setting up your company in New York, or if it's in London, or if it's in Hong Kong. So the only real answer is to consult a local lawyer in that particular jurisdiction. So that brings us to the end of part 1 of this class. You should have a clear idea by now of how to set up the corporate structure of an LPO, and how to structure the LPO as well in terms of licenses, in terms of approvals, and in terms of investment.